Hey, Mick Holly again, and today we're going to be talking a little bit about cash flow and avoiding the cash flow black hole, because the number one killer of businesses is when they run out of cash. And as you know, here at the Business by the Numbers, we subscribe to the adage, revenue is vanity, profit is sanity, and cash is king. Everybody understands revenue, they understand sales, they understand profit, but you can't spend profit, you can only spend cash. So you need cash. It's the lifeblood of any company. So we're going to talk a little bit about cash because it can be a little bit mercurial and hard to understand. So I'm going to give you an easy way of understanding what your cash flow is. And here's what I call the cash flow blind spot, and this particular device is called the Johari window. So you see over here on the one side we've got things that are known or unknown by others, and those things are known by you and the owner of the business. So for example, you know that profit is up and the business is growing. Everybody else in your company feels great because profit is fantastic. But what you don't probably share, if you get a little tight with cash, is we're a little bit close to breaking our cash covenants. So you privately hold that, so you know it as the owner, but you don't want to share that with your employees because you don't want them to feel concerned or insecure about their jobs. You want them to go out and generate revenue that turns into good profit and generates good cash. But then it comes a point in time when you don't know how you ran out of cash. Now, some people, you didn't know as the owner that you ran out of cash, but somebody else did. Your CPA probably did because they're looking at your numbers. And so what is not known by many and not known by you is really understanding the financial bones of the business. We call that running your business by the numbers, and is the foundation of Business by the Numbers and part of our education series here today. But let's just talk about that cash, that blind spot, right? We didn't know it was coming, but other people could see it, like your CPA. So I'm going to give you a device to be able to illuminate that blind spot so you don't fall into the black hole. And it's really, really simple. Think about your own checkbook and your own bank account. If your bank account has $9,000, so $10,000 in it at the start of the year, and at the end of the year it only has $1,000 in it, what is your cash flow? Well, of course, $9,000 left your account. So you have a negative cash flow. Very easy to think about in our own terms. Now let's apply that simple technique to your business. And your business has really got three bank accounts, if you will. You've got your cash on hand, you've got your short-term debt over here, and then you've got the long-term debt, the overall long-term funding for the business. And in this company, in 2017, we had cash of about $200,000 in our bank account. And I've colored that green because it's a positive number. But here's what we owe. We're borrowing $1 million short term, and we're borrowing long term $3 million. So those are negative numbers. Now, if I add all of those numbers up, I come to a net debt value of $3.8 million. In 2018, what happened? Well, we consumed about $100,000 from our cash account. Our short-term borrowing needs went up by about $500,000, but we did a really, really good job. You did a great job of reducing your long-term debt. You generated good cash and you used that to pay down debt. That's why we like to generate cash, because not only does it help us pay our bills, but it helps us reduce the overall debt in the business. And so the net debt for this business at the end of 2018 was $2.4 million. And therefore the difference, we started with a negative 3.8 million, we owed 3.8 million, and at the end of 2018 we owed 2.4 million. So the difference was we had a positive cash flow of $1.4 million. Excellent. So the way to calculate your cash flow very, very easily is the change in your net debt. And these three items, cash on hand, short-term debt and long-term debt, are line items in your financial statements, and your CFO will be able to give you those. And you can look at those on a weekly, a monthly, a quarterly, and an annual basis, so you'll never be surprised. You remember the king, cash is king. The king never likes to be surprised about cash. And so here's a very, very easy way to calculate your cash flow. You don't need a CPA, very, very easy. And cash flow is your lifeblood. You need to understand it. And you should understand your cash flow position weekly. So I suggest that discipline for you in your business. And I look forward to seeing you in our next video.